We've got a packed show today because we are seeing something very unusual happening across markets right now. On one side, artificial intelligence is creating brand new winners. On the other side, we are watching old industries fight to stay relevant. And in the middle of all of that, Bitcoin, crypto, robotics, and Wall Street are starting to collide. So let's get into it. First up, we have to talk about the humanoid robot race is absolutely accelerating much faster than most people realize. A new report just ranked the world's top humanoid robots, and we are no longer talking about science fiction. These machines are already working in factories. They are already moving inventory, and some are being backed by companies like OpenAI, Nvidia, Microsoft, and Tesla. We'll break down the top 5 humanoid robots in the world right now and why this could become one of the biggest investment opportunities of the next decade. Then Nvidia might be preparing its biggest move since the AI boom began. Jensen Huang is teasing what he calls a new era of PC, and according to reports, Nvidia is about to challenge Intel, AMD, Qualcomm, and by entering the Windows processor market. So this isn't just another chip launch. This could completely reshape the future of AI-powered computers. We'll explain why investors are paying so much attention. Then next, one of the biggest battles in finance is heating up. We have JPMorgan CEO Jamie Dimon is now openly fighting against a major crypto bill moving through Washington. The Clarity Act could create clear crypto. Dimon says it gives crypto companies an unfair advantage over banks. So is this really about consumer protection, or this is a battle over who controls the future of money? We'll break it all down. Then we'll look at a story that every Bitcoin investor should pay attention to. So now we have another Bitcoin treasury company has officially given up. After buying Bitcoin at much higher prices, the company is now selling its holdings and shutting down its strategy less than a year later. It's an important reminder that not every company can become the next micro-strategy. And later in the show, could Elon Musk be building the ultimate technology empire? Rumors are swirling that Tesla and SpaceX could eventually merge. Nothing is confirmed though, but if it happens, the combined company would become one of the largest corporate Bitcoin holders in the world. And the bigger story might actually be AI. We'll explain why some analysts think Elon Musk is trying to connect AI, robotics, satellites, transportation, and Bitcoin into one giant ecosystem. We'll also cover the chaos happening around SpaceX pre-IPO trading market. Hundreds of traders were liquidated after a massive flash crash. Some people thought SpaceX collapsed, others thought exchanges were manipulating prices. Well, the truth is much more interesting. And finally, BNB is absolutely exploding higher. The reason why is that Binance is preparing to launch tokenized stocks. That means people can soon buy companies like Apple, Nvidia, Tesla directly through Binance. If this works, we might be witnessing the beginning of something much bigger than crypto. The war between TradFi and crypto is starting to disappear. And honestly, I think that's where the entire industry is heading. So today we've got robots, we've got Bitcoin, we've got Wall Street, Elon Musk, and of course the future of finance. So without further ado, let's get started with the humanoid robots news we have. And the humanoid robot race we know is officially here. And for the first time, we are starting to see who might actually win. Just a few years ago, humanoid robots felt like science fiction, but today, Tesla is building it. Nvidia is training them. OpenAI is. Companies across the world are racing to put them into factories, warehouses, hospitals, and even at our homes. A new report just ranked basically 34 of the world's leading humanoid robots, looking at real-world deployments, AI capabilities, pricing, and also commercial readiness. And honestly, the results tell us a lot about where the industry is heading. Because the question is no longer, can humanoid robots work? The question right now is, which company will dominate the next trillion-dollar industry? So here we have a list. We don't have the time to go through all 34 robots on this list. So if you're interested, do check it out on the internet. But however, what we're going to do here, we're going to go over the top 5. So top 5, we have Figure, Tesla, Digit, Alice, and Unitree. We're going to spend some time to look at Figure for now. So it's the current king of humanoid robots. So the report ranks Figure 03 as the best humanoid robot in the world right now. Figure AI is one of the hottest AI robotics companies in Silicon Valley. So it is backed by OpenAI, Microsoft, Nvidia, and Jeff Bezos. And unlike many competitors, Figure robots are already doing real work. The company says its robots helped build more than 30,000 vehicles during pilot programs at BMW factories. The robot combines advanced AI with strong hardware. It can understand speech, it can plan tasks, correct mistakes, and perform factory work with very little supervision. The company is also scaling production, so its Board Q factory can reportedly build around 12,000 robots per year, with plans to massively expand from there. So as for us investors, like Figure AI is basically trying to become the Nvidia of humanoid robots. If AI becomes the brain of future robots, then Figure wants to own that body. So that's why it's the number 1 right now in the current state. Well, we're in June in 2026, but let's see a quarter of year later if it still remain number 1. The second one we have to go over is Tesla. So Tesla on the right side here, coming at number 2 on the ranking list. So Tesla Optimus. Well, the big news here is that Tesla has officially started mass production of Optimus Gen 3. According to the report, more than 1,000 Optimus robots are already being tested inside Tesla factories. They are handling tasks like moving parts, sorting materials, quality inspections, and factory logistics. Tesla's long-term goal is quite ambitious. So Elon Musk believes robots could eventually become a much bigger business than cars. And unlike most competitors, Tesla already knows how to manufacture products at massive scale. The company ultimately wants Optimus to cost below $20,000 per robot. So as for investors like you and me, why should we pay attention here, right? So if Tesla successfully mass-produce humanoid robots the same way as it mass-produced electric vehicles, then Optimus would become one of the most important products of the decade. So the third on the list is agility robots. So agility robotics Digit. So Digit from this company is actually unlike Tesla and Figure. Digit is not trying to do everything. So it focuses on one area only, which is in warehouse and logistics. And it's actually working. So Digit robots have been deployed inside Amazon facilities and large logistics centers. The report says Digit has already handled more than 100,000 warehouse bins in real-world operations. And the biggest advantage is battery life. So Digit can operate for around 8 hours, being one of the longest runtimes among humanoid robots today. So that's why we're paying attention, because remember, Amazon employs over 1 million workers globally. Even partial automation creates a huge market opportunity. So that's why this is agility robotics is ultimately one of the companies we should really pay attention in the humanoid robot race. And then the fourth one we have to go over is Boston Dynamics. Like if you haven't watched robot videos, if you actually have watched any of the robot videos, you've probably seen Atlas. So the robot famous for backflips or jumping over obstacles, well, right now it's finally getting a real job. The new electric Atlas is already being deployed inside Hyundai factories. What's unique about Atlas is mobility. The robot can move in ways that looks almost unnatural. It has some joints capable of rotating much further than a human body. And now Google DeepMind is helping provide the AI layer through Gemini robotics. So that's why paying attention. For years, Atlas, it was more like a cool demo. Now it's becoming an industrial product, and that is a major shift. Finally, we have to go through the China one. So Unitree is the coming at number 5 of this list of 34 robots that they've been compared. So Unitree, the China one, why it is on sitting at number 5 is still doing really good. Well, that's because this robot is unbelievably cheap. The robot starts at roughly $16,000. That's dramatically cheaper than most Western competitors. And despite the lower price, it still offers humanoid movement, AI training capabilities, robotic hands, and developer tools. So Unitree is becoming the almost like the Xiaomi of humanoid robots. Instead of chasing luxury pricing, they are trying to flood the market with affordable machines. And we have seen this movie before. Like sometimes the company that wins isn't the most advanced, it's the company that scales the fastest. So China is one of the player in the fields that we definitely cannot ignore. So for this ranking list, like the biggest takeaway from this report isn't which robot ranks number 1. It's the humanoid robots that have moved from concept to deployment. Factories are using them, warehouses are using them, and home robots are starting to arrive. The AI race is no longer just about ChatGPT versus Claude or Gemini. The next phase is AI would get a body. And when that happens, we are talking about a market that could eventually be larger than smartphones, larger than cars, and possibly one of the biggest technology opportunities of our lifetime. So that's why we are paying attention. So speaking of opportunity of our lifetime, of course, we have to talk about Nvidia, which made a lot of people millionaires globally across different countries as well. So Nvidia right now, they have a new challenge they're trying to achieve. So Nvidia wants to change the PC industry yet again. So for most people, Nvidia is the company behind the AI boom. They make the GPUs powering ChatGPT, Claude, Gemini, and almost every major AI model in the world. And right now, Nvidia wants something even bigger. It doesn't just want to sell graphic cards anymore. It wants to become the company that powers the entire PC. And according to multiple reports, Jensen Huang may officially unveil the vision at Computex in Taipei this week. So what happened is that there are some teaser posts by Nvidia. So Nvidia right here, they posted a teaser online with just a few simple words. So a new era of PC. Like this alone, this tweet alone, got people talking. But what made investors really pay attention was who joined the teaser. Because right now we have Microsoft posted it. We also have ARM posted the same thing. So basically, what we have right now is 3 of the biggest names in competing or hinting at the same announcement. And now industry reports suggest Nvidia is finally preparing to enter the Windows PC processor market. This is something people have been talking about for a few years, and it looks like it's finally happening. So the rumor right now is actually a chip called N1X. So think of it as NVIDIA's version of Apple's M series chips. So instead of having just one CPU, one GPU, and one AI processor, Nvidia wants to combine everything into a single chip. So one package, one brain, one system. That's exactly what Apple did it with M1 chip or M2, M3, and M4, and actually completely changed the Mac business. So right now, Nvidia wants to bring the same strategy to Windows computers. And the PC industry is entering a new phase. Like companies are no longer selling computers based only on speed or battery life or graphics. Now they are selling AI PCs, machines capable of running AI directly on the device. So instead of selling everything to the cloud, Microsoft calls this vision the future of Copilot PCs, and NVIDIA wants to become the engine behind it. And now remember, these are still leaks and reports. Nothing has been officially confirmed just yet. But according to multiple reports, N1X could include a 20-core ARM CPU, Blackwell GPU architecture, around 6,000 CUDA cores, and up to 128 gigabyte unified memory. So in simple English, what does that mean? That means like this could deliver desktop level AI performance inside a laptop. So the GPU, CPU, and AI engine would all share memory together, making AI workloads much faster and much more efficient. Now, let's be honest, like this is not completely new because Apple proved this strategy works. A few years ago, Apple stopped using Intel chips. Instead, it builds its own processors. And the result right now is actually quite good. So MacBook suddenly had better battery life and also faster performance, less heat, quieter operation, and consumers loved it. Now, NVIDIA is basically trying to do the same thing, but instead of targeting only Macs, it wants to target the entire Windows ecosystem. So we're talking about Dell, Lenovo, HP, Microsoft Surface. So basically, all the entire Microsoft system. However, there's some recent some bad news for Qualcomm as well. Like for years, Qualcomm had the Windows on ARM on our market mostly to itself. Like if you wanted an ARM-based Windows laptop, Qualcomm was basically the major or the only major option out there. Nvidia entering the market changes that oversight. Now, Windows on ARM becomes a real competition, and competition usually leads to faster innovation, better products, lower prices, which is ultimately good for consumers. But like right now, Qualcomm is facing some real challenge. Now, like there is also a big problem because we know like Nvidia getting into business, it sounds very hypey, like we should get into some of the action or something like that. But before everyone gets too excited, there is a major risk. So we have to talk about gaming. Most PC games were built for x86 processor, Intel, AMD, the traditional PC world. NVIDIA's N1X is expected to use ARM architecture instead. That means many older games might need translation software to run properly. Some games would lose performance, some may not work perfectly. That's exactly the challenge Apple faced when it moved Macs to ARM chips. The difference is that Apple controls the entire ecosystem, while Windows does not. So NVIDIA still have some work to do right now. But honestly, I think this story is bigger than just one chip. For decades, Nvidia was a component supplier. So whether it's more like a GPU company, a piece of the computer now is trying to become the platform itself. That's completely different position in the value chain. So instead of selling one part of the machine, Nvidia wants to define the entire machine. So whether it's GPU, CPU, AI, basically everything. If they pull it off, they become a more than a graphics card company. They would become the foundation of the AI PC era. So that's why we are paying attention, especially for viewers out there. If you are holding any Nvidia, it could be another bullish news for investor. But anyways, we are taking a short break from here. When we come back, we have to talk about the crypto regulation. And right now, we have a really big opponent for the crypto market. So, being Jamie Dimon, he has been a long opponent for the crypto market. This is actually not new, but this time he's targeting the Clarity Act because apparently it would harm his business in the banking system. So, do stay with us after the break. We're going to give you more details.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Alright guys, welcome back to Roxum TV and thanks for sticking around with us after the break. We now have to talk about Jamie Dimon. So JPMorgan CEO literally just picked a fight with the crypto community yet again. That's actually not something new, but like when Wall Street is paying attention. And now he's coming out strongly against one of the most important crypto bills currently moving through Washington. A bill that many in the crypto industry believe could reshape the future of digital assets in the United States. So, what is happening here is that why is one of the world's most powerful banks so worried? So, let's actually break it down. First of all, we need to understand what the Clarity Act is for. So, Clarity Act is designed to create clear rules for crypto in the United States. For years, one of the biggest complaints from the crypto industry has been uncertainty. So, companies often don't know which regulator is in charge, which tokens are securities, which tokens are commodities, and what rules they need to follow. And Clarity Act aims to fix that. Supporters say clear rules would encourage innovation, attract investment, and keep crypto businesses in America instead of pushing them overseas. But the bill is right now not guaranteed to pass because recently, like the bill passed a key Senate committee vote. That is one of the major steps, but the bigger challenge is still ahead. So Republicans currently control the Senate, but they don't have enough votes on their own. To move the bill forward, supporters likely need backing from several Democrats. And right now, supporters remains very divided. Some lawmakers would worry about money launderings or consumer protection or stablecoin oversight. So despite recent progress, the outcome is still uncertain. So you could ask next, like, why is Jamie Dimon so against it? And this is where it gets interesting. Jamie Dimon says the current version of the bill creates an unfair advantage of crypto communities. His biggest concern is interest-bearing stablecoins. What it means in simple English is that many stablecoin companies want to allow users to earn yield on their digital dollars, and that's where banks should get nervous because traditionally speaking, people put money into bank accounts, bank then use their deposits to make loans and generate profits. But if consumers can hold stablecoins and earn attractive yields instead, some money might leave the traditional banking system. And this is really about a deposit war because think about it from the bank's perspective. Imagine you have $10,000 in saving accounts earning very little yield, or if you have $10,000 in stablecoin account earning a much higher yield. Many people would choose option number two, and if enough people move their money, banks lose deposits, and that's why Jamie Dimon see this as a major threat. So Jamie Dimon's his position is actually pretty straightforward. What he says is that if crypto companies want to offer services that look like banking, then they should become banks. What it means is that if you are taking customer funds, if you are paying interest, if you are providing financial services, then you should follow the same rules banks follow. That would include capital requirements, anti-money laundering checks, Bank Secrecy Act compliance, and regulatory oversight. His argument is not necessarily anti-crypto. His argument is same activity, same rules. And this is where it gets interesting. So that is a fascinating battle. Here we have Coinbase, and on the left side, we of course have Jamie Dimon. So on one side, you have crypto industry. They argue that blockchain technology can make financial services faster, cheaper, and more efficient. On the other side, you have traditional banks. They argue that financial stability requires strict regulation. Both sides claim they are protecting consumers, but let's be honest, there's also a business fight happening here because stablecoins are starting to compete directly with banks. So what we're watching here is a battle over the future of money. For decades, banks control payments, they control deposits, savings, lending. Right now, blockchain technology is challenging that model. Stablecoins move money instantly, they operate 24/7, they don't always require traditional banking rails, and that creates opportunities, but at the same time, it creates risk, which is exactly why Washington is debating these rules right now, and whoever wins this fight could help reshape the future financial system for decades to come. So as soon as we have more updates regarding the Clarity Act, of course, the first platform we'll break is on Roxanne TV. All right, so moving on to some Bitcoin news. Right now, this news will actually upset some Bitcoin maxi of the viewers of the channel, which I know there are lots of them. So what we have here is we have another Bitcoin treasury company has thrown in the towel. And this story is a warning for every company thinking that simply buying Bitcoin would automatically solve the business problems. Because less than a year ago, this company was being promoted as the future Bitcoin treasury success story. Right now, it's actually selling this Bitcoin, and its stock absolutely crashed. And its Bitcoin treasury, Bitcoin strategy is officially dead. So what happened? Who is this company I'm talking about? So it's Qualcomm, so being a French semiconductor company. So they have officially ended its Bitcoin treasury strategy. The company confirmed it has sold Bitcoin in order to fully repay its convertible debt, and it plans to continue selling its remaining Bitcoin holdings. At one point, Sequans owned more than 3,200 BTC, now is gradually exiting the position. The entire experiment lasted less than a year. So let's go back in time. Like, how did it start? So back in June 2025, like you guys will probably notice this huge spike. So we're looking at the past year performance of Sequans. So we had this huge spike. That is when Sequoia was facing serious business problems. The company had received a warning from the New York Stock Exchange. Its market value had fallen below listing requirements. So the stock was struggling. The core semiconductor business was struggling. So management launched a Bitcoin treasury strategy. The idea was simple, which is to raise cash and buy Bitcoin and hopefully create enough value for shareholders. At the time, many people thought this could be another MicroStrategy style success story because it's being really reflected on the price. So in late June, the price of the stock crashed to 13 per buck, so $13 per bucks. And then because of this news broke, it absolutely skyrocketed to almost $54 per share. But after that spike, basically is down only. So past year performance is down 75%. Well, the problem actually started on day one, so it's not so much a Bitcoin problem. There is also a major difference because there are so many copycats trying to copy what MicroStrategy has done for the space, and MicroStrategy they would buy Bitcoin using a profitable business and access to capital market. Well, Sequon is a different case because they were already under financial pressure, and much of that money used to buy Bitcoin came from debt. In fact, a large portion of that Bitcoin was effectively tied to financing arrangements from the beginning. That means if things went wrong, the company might be forced to sell. That's exactly what is happening today. So by October 2025, Sequans have accumulated around 3,200 BTC. And the average purchase price is about $116,000 per BTC. Today, Bitcoin is trading around 73,000. So the company is sitting on massive losses. Last year, they already sold nearly 1,000 Bitcoin just to help manage debt obligations. That move absolutely shocked many Bitcoin supporters because the entire treasury strategy is built upon one simple rule, which is not to sell. Well, Michael Saylor is different though. Like Michael Saylor became so famous for not selling your Bitcoin. That's easy to say when your company can survive market volatility. But for this case, so for Sequans, it shows what happens when a company doesn't have that flexibility. So when debt payments arrive, when cash flow is weak, when the core business is losing money, you don't always get luxury of holding forever. Sometimes you have to sell even at a loss. And the numbers here are quite ugly. Like this shocked this actually tells a story. So as I mentioned, the stock price is down 75% this year. Over the past last 5 years, the stock is has fallen around 97%. The company's latest quarterly revenue was only about $6 million. Meanwhile, operating losses exceeded $15 million. Last year alone, the company reported more than $67 million in Bitcoin-related impairment losses. That's a painful outcome for shareholders. So the bigger question here is, I think this story highlights something many investors are starting to realize. Not all Bitcoin treasury companies are the same. The market often treats them as one category, but they have all of them. They have huge differences. Some companies have strong cash flow. They have healthy balances, like Michael Saylor, like MicroStrategy. They have access to financing and an absolutely growing business. Others, like Sequans, they are struggling. So their businesses are struggling. And what they're doing here is that they hope Bitcoin could save them. those are very different situations. Buying Bitcoin doesn't magically solve a broken business model. Personally, this is definitely, I do not think this is a Bitcoin failure at all. This is a business failure, a business execution failure. Bitcoin did not force the quants to borrow aggressively. Bitcoin didn't cause the company's semiconductor business to struggle. The problem was leverage. When you combine that, weak cash flow, and volatility, things can unravel very quickly. And that's true whether you're buying Bitcoin or stocks or real estates or anything else. So that's some risk we have to pay attention when we are buying into the Bitcoin treasury company stocks. Anyways, do let me know what you think if this trend is going to continue. If you think this Bitcoin treasury narrative is coming to an end, we are just going to see more companies dumping the Bitcoin. If so, of course, there'll be more selling pressure in the market, and I'm more than happy to buy Bitcoin at a lower price for sure. Anyways, we'll take a short break from here, and when we come back, we are talking about a giant. So right now, we have to talk about Elon Musk. Right now, there's rumor across Wall Street and also crypto, is Elon Musk going to merge Tesla and SpaceX together? If so, that will make them one of the biggest holder of Bitcoin in the entire world. So if you're intrigued, make sure to stay with us after the break. We're going to give you the details in a bit.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
All right, guys, welcome back to Roxum TV, and thanks for sticking around with us after the break. As promised, we now have to talk about Elon Musk because there's rumor out there that Elon Musk is trying to combine Tesla and SpaceX. So would these two companies eventually merge into a single company? Nothing has been officially confirmed yet, but if it ever happened, the combined company will instantly become one of the largest corporate Bitcoin holders in the world. And that could have major implications for AI, robotics, space exploration, and even Bitcoin adoption. So the story we have right here is that according to reports circulating in financial media, some analysts and industry insiders believe a future merger between Tesla and SpaceX is possible. The speculation intensified after SpaceX officially filed for its IPO. And when investors started digging through the numbers, they discovered something interesting. So both companies hold Bitcoin, a significant amount of Bitcoin. So if we take a look at, let's do SpaceX first. So SpaceX had recently disclosed that it holds roughly 18,000, so more than 18,000 BTC, while Tesla still owns about 11,000 BTC. So combined, that will bring the total to more than 30,000 BTC. At today's price, that's worth more than $2 billion. That would make the combined company one of the biggest corporate Bitcoin holders on earth, though it's still far behind MicroStrategy. So MicroStrategy right now own more than 843,000 BTC stack, but easily among the global leaders if they were to combine these two companies together. So as for the Bitcoin angle, like what's interesting is that both companies bought Bitcoin years ago. So Tesla back in the days famously purchased Bitcoin back in 2021. SpaceX also accumulating Bitcoin around the same period, while Tesla sold part of its holding during the 2022 bear market. Both companies have continued holding substantial positions. The latest SpaceX filing showed an average purchase price of around $35,000 per Bitcoin. With Bitcoin currently trading around $73,000, those holdings are still sitting on massive unrealized gains. In other words, Elon Musk companies have quietly become very successful Bitcoin investors. But honestly, I don't think Bitcoin is the main reason investors are talking about this merger. The biggest story is actually AI. Like, look at what Elon has been doing in the space. So he merged X with XAI. He's integrating AI across multiple companies. Tesla is building autonomous robots and autonomous driving system. XAI is building large language models and AI infrastructure. SpaceX control one of the world's largest satellite networks through Starlink. And now SpaceX is becoming a public company. Many analysts believe Elon Musk's long-term vision is to connect all the pieces together. So now we have AI with robotics, transportation, communication, energy, and space under one giant ecosystem. Some investors believe a Tesla and SpaceX combination could be another major step forward to that vision. So that actually, if you ask me, it makes a lot of sense. These businesses are already like basically sharing technology, sharing talent, infrastructure, and leadership, of course. Bringing them together could create powerful synergies. Eventually, that starts to looking less like separate companies and more like a complete technology platform. But there's still a big challenge. Like before everyone gets too excited, we have to remember this is still speculation we are talking about. So nothing has been confirmed yet. Neither Tesla nor SpaceX has confirmed any merger plans. And even if Elon Musk wanted to do so, there are still major challenges. So we have to think about valuation, or we have to get the shareholder approval, corporate structure, governance questions, and deciding how ownership could work. And these are not small issues. So for now, investors should treat this as an interesting possibility, not an announced deal. Personally, I think the Bitcoin story is actually the least important in this matter. The real question is whether Elon Musk would eventually want to build a single AI-powered technology empire. And if that ecosystem continues growing around AI, robotics, communications, and Bitcoin, it could become one of the most powerful technology platforms the world has ever seen. Of course, we'll be watching that very closely and whether this remains speculation or becomes reality here on Roxham TV. All right, so moving on to the next story we have to cover and kind of like build on that because we just talked about Elon Musk and SpaceX, and we know SpaceX is one of the most hyped product in the market right now. SpaceX hasn't even done the IPO yet, and traders are already getting wiped out. The reason why why they got liquidated is of course Hyperliquid, which we covered that extensively here on Roxham TV previously as well. So what happened is that within just 24 hours, two different SpaceX-related products suffered massive price swings. One appeared to crash 80%, another actually crashed 45% in less than 10 minutes. Hundreds of traders were liquidated, and it's becoming a powerful reminder that pre-IPO markets, it might sound very exciting, but they are extremely dangerous. So let's start with the easy story because we have two incidents that happen here. So the easy one, we have to start with BitGet first. So on BitGet, traders suddenly saw a SpaceX related token, so-called pre-SpaceX plunge around 80%. So this massive daily candle, it looks very terrifying. Social media immediately exploded. People thought the market had collapsed. Some thought SpaceX news had leaked. Others accused exchange of manipulating prices, but actually none of that was true. The reason was actually much simpler. So BitGet had already announced a 1 for 5 tokens bid. That means if you own one token before, you will receive 5 new tokens afterward. Your total value stays exactly the same, but the price of each token drops to 1/5 of the previous level. So the chart looked like a 80% crash, but it wasn't a real crash. It was basically an accounting adjustment. The problem was that many traders only see the chart on X and didn't really read the announcement. And in markets, charts often move faster than facts. So this is understandable, and this is just a miscommunication problem, I would say. So this is not where the real issue lies. But let's go on to the real issue, because on Hyperliquid, that is a serious incident. So on Hyperliquid, the ecosystem platform ventures, a SpaceX perpetual contract suffered a genuine flash crash. In just 3 minutes, the contract plunged from around $2,200 to roughly $1,200. So that is a drop of 45%, almost half of its value. Then it bounced back almost instantly. The entire event happened in less than half an hour. And by then, damage was already done. More than 400 traders were liquidated. Over 1,300 positions were wiped out. And roughly $1.5 million worth of positions disappeared. So the question is, what happened? Why Hyperliquid is causing this problem to traders? According to the platform, the trigger was an oracle pricing error. So for viewers at home, an oracle is basically the data feed that tells a blockchain platform what the current price is. So think of it as the market GPS system. If the GPS suddenly says you are in the ocean while you're actually driving on a motorway, bad things would happen. That's essentially what happened here. A third-party data provider reportedly sent incorrect price information that caused the platform's pricing system to briefly go crazy. And once prices started moving lower, liquidations, boom, it kicks in. Then more liquidations trigger even more selling. And suddenly you got a domino effect. So this is a deeper issue, especially tied to the pre-IPO market. The Oracle era might have started the problem, but thin liquidity made it worse because we are talking about pre-IPO at the end of the day. So these SpaceX contracts are still very small markets. We are talking about only a few $1 million of open interest. A few $1 million of daily trading volume, that's tiny compared to Bitcoin, Nvidia, or Tesla. In a market this small, a single large order can move prices very dramatically. And it's I would say it's like throwing a rock into a small pond. That splash affects everything because the pond is so small and there isn't much liquidity to begin with. And when leverage is involved, things get ugly very quickly. So the problem is more pre-IPO markets. Though, to be fair though, this is still one of the most exciting trends in crypto because for decades, ordinary investors like you and me had almost no access to companies like SpaceX or OpenAI or Anthropic or other private tech giants. Those opportunities were usually reserved for venture capital firms and wealthy insiders. Pre-IPO products are trying to change that. They allow regular investors to speculate on private companies before they officially go public. And that's a powerful idea. And honestly, it's one of the more important innovations happening in crypto today. But the risk is, of course, massive. Like, just look at this chart, then you'll know. The problem is that price discovery is still immature. There's no official stock trading yet. Like, there is no deep institutional liquidity, no clear valuation benchmark, and a very limited arbitrage. That means prices can swing wildly based on sentiment, based on rumors, based on leverage, and liquidity conditions. And that's exactly what we saw this week. So Finotech, we know SpaceX IPO is still weeks away, but we have already seen a go back to the Bitcoin one, the big get one. So 80%, basically 80% crash on Bitgen and 45% flash crash on Hyperliquid. So the big get one, it was just misunderstanding. The other one, so Hyperliquid one, is a real liquidation event. Together, they highlight both the promise and the danger of pre-IPO trading. The opportunities, of course, is real, but so is the risk. And if you're trading these products with leverage, remember, before SpaceX reaches the moon, your position might not even survive the launch. So before you get into any investment, make sure you know your risk and reward and whether you think the reward is worth the risk that you're taking. Okay, so like last story of the day, we have to talk about BNB. So BNB is absolutely exploding. The token is up nearly 20% in just a few days. And the reason why Binance is doing so well is not because of Bitcoin. It's not another meme coin frenzy on the BNB chain. It's actually because Binance is preparing to launch something that could fundamentally change the relationship between crypto exchanges and traditional finance. Because so here we have a teaser post from Binance. I have no idea what that is, but so apparently they're teasing some new product on today, so 1st of June. So starting on 1st of June, Binance is expected to allow users to buy stocks like Apple or Nvidia or Tesla and potentially many more directly through the Binance app. And if this works, the line between a stockbroker and crypto exchange might become almost invisible. So what is Binance actually launching? We have a screenshot here just to provide some idea. So the product is reportedly called B stocks. And unlike some of the stock tokens we saw years ago, these are expected to be backed by the real shares. And that's marked a major difference because back in 2021, Binance launched stock tokens linked to companies like Tesla and Apple, but regulators quickly stepped in. The products were eventually shut down. This time, Binance appears to be using a very different structure. So, according to reports, the underlying shares will be held by Alpaca Securities. So, Alpaca is a regulated US brokerage firm. That means when someone buys exposure to Apple or Nvidia through this system, there is supposedly a real stock sitting behind it. So it's not just some synthetic contract, it's not just a price tracker, a real share held within regulated brokerage infrastructure. Users will also be able to buy fractional shares, meaning you don't need thousands of dollars to buy a full Nvidia share. You can potentially buy just $10 worth. And that comes to the crypto part, and this is where it gets interesting. Once users own these stock positions, they can reportedly mint a corresponding token called a B stock. These tokens would be live on BNB chain, and unlike the stock market, which closes every evening and shutdowns on weekends, these tokenized stocks can potentially trade 24 hours a day, 7 days a week, anywhere in the world. So think about that. The New York Stock Exchange is closed, but your Apple stock and your Apple stock token keeps trading. Your Tesla token keeps trading, Nvidia token keeps trading. That's a completely different market structure. And Binance is also trying to explore the derivative side of the business. They're not just stopping there. Earlier this month, or earlier last month, okay, I just forgot it's June. So earlier last month, Bitcoin futures, Binance futures are already begin listing stock-related perpetual contracts tied to companies and ETFs. Now, reports suggest a dedicated stock section will come alongside futures, alongside options, and other trading products. That sounds more like a small UI change, but symbolically speaking, is huge because it signals stocks are becoming a core product category inside crypto exchanges. So it's not just an experiment, not a side feature, but a core business. Well, you could ask, all right, Jamie, so these tokenized stocks, who's this for, right? Interestingly, US users are reportedly excluded, at least initially, because Binance might be targeting a much bigger global audience. So think about investors in Southeast Asia, in Latin America, the Middle East, or Africa. In many countries, opening a US brokerage account is very complicated. There are paperwork requirements, currency conversion fees, banking restrictions, long approval process, but millions of people would already have USD or Binance account and a smartphone. And for them, tokenized stocks could become the easiest way to access global markets. So, in other words speaking, we are seeing this dynamics on a BNB token price absolutely crashing, exploding. That means like investors are thinking that Binance is going to make a huge load of money, and it is like investors around the world, they wish they could purchase US stocks, but there is not simple access for them to do that. And Binance just provide them a solution. So that means more trading fees and trading volume coming to Binance. And for that case, I will see this as the dynamic we are reaching in the near future. For that case, we have two separate worlds. So TradFi on one side, we also have crypto on the other side. We have completely different infrastructure, very different markets, but interestingly, those two worlds are merging. And also, honestly, I think this would be the end game. Not crypto replacing TradFi, not TradFi killing crypto, but the two will eventually becoming one system where stocks, stablecoins, bitcoins, ETFs, bonds, tokenized assets all trade through the same digital infrastructure. So the reason, again, like BNB is pumping, isn't because there is another hype cycle. It's because investors are starting to see Binance becoming something much bigger than a crypto exchange. If Binance can successfully bring stocks on chain at global scale, it becomes part exchange, part broker, part financial super app. And if that's where finance is heading, then what we're witnessing today might be much bigger than just a new Binance product. It might actually be another step toward the merger of TradFi and crypto itself. And personally, I think this is where the entire industry is heading to actually. All right, so that was the summary of basically Binance and explanation why BNB is absolutely skyrocketing and doing so great despite in a bear market and Bitcoin going nowhere. So let me know if any of the viewers are the holder of BNB tokens, then a huge congratulations to you. But anyways, we are towards the end of today's segment. Before you go, make sure to give us a follow on X. So my X is jamjamcrypto_IO. Make sure to follow Roxham TV as well, because we have regular news coming out on a basically a regular basis, breaking down about the market, about finance, about AI, about Bitcoin, of course. So point being, there is so much valuable content, and we have prominent guests joining us, hosted by different hosts of the platform. So make sure to give us a follow. As always, I'm live here Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry. The recorded versions are also available on both channels, so being Jamjam Crypto YouTube channel and also Roxham TV YouTube channel. Thank you guys for watching, and I'll see you guys in tomorrow's show.